Sometimes it's good to define our terms, even for those of us who do this every day for a living.
Bitcoin maximalist.
Crypto bridge.
TradFi.
DAX. Shitcoin.
Crypto bridge.
Altcoin.
Stablecoin.
Crypto winter.
DeFi.
Bitcoins.
NFT.
Bitcoin.
Staking.
DeFi.
NFT. DEX.
Yield farming.
GameFi. Altcoin.
I'm Stacey Marie Ishmael, managing editor of crypto for Bloomberg News. And this is Bloomberg Crypto, a new daily Bloomberg iHeart podcast. It's Monday, June 6th. You might already consider crypto to be synonymous with the word volatility. But what about all the other words that get thrown around by enthusiasts? What's staking all about? What's a bridge? And why are so many folks on Twitter sending messages that just say, GM? Joining me today, Bloomberg reporters Hannah Miller and Vildana Hodrick are here to help with a crypto glossary. I am really glad to be joined today by two truly excellent colleagues of mine. One is Hannah Miller, who is joining us from her home studio in San Francisco, and the other is Vildana Hodrick, who's joining us from her home studio in New York City. Thank you both. So we're going to talk words today, which I suppose as journalists is like what we do all the time anyway, but today we're going to specifically talk words when it comes to defining some of the terms that get thrown around a lot in crypto. Because this is a word that's been in the news a lot, or I should say two words that have been in the news a lot, we're going to kick things off with
algorithmic stablecoins.
Yeah, this has been such a hot topic as of late, considering the crash of Terra USD coin. Algorithmic stablecoins are pretty complex, but also very interesting. They have their price maintained by a relationship with another cryptocurrency, and also through just complex mathematical equations. So in the case of Terra USD, that was pegged to the Luna token. And basically, if the price of one dropped, investors would be incentivized to buy the other one in the hopes that this would maintain a peg for a USD coin and keep it close to $1.
Okay, so Vildana.
Altcoins.
Tell us more.
An altcoin is basically just any coin that isn't Bitcoin. You might hear people referring to alts or altcoins, alternative coins, and they're really just talking about any smaller token or smaller coin that isn't Bitcoin. And they also are in the news recently just because we're having this sell-off in the crypto market, and you see Bitcoin sometimes holding up just a lot better than some of these alternative coins. And so you're hearing people talking about altcoins and just how much they've been suffering through the recent downturn.
Speaking of Bitcoin, what is a
Bitcoin maximalist?
Yeah, Bitcoin maximalist, or Bitcoin maxi for short. They are all in on Bitcoin, which is the most widely held cryptocurrency. And these people believe that the future is only for Bitcoin. This will be the only digital currency that we're going to need. They don't care about altcoins. They're basically all in. And some people also consider this term to be a little derogatory.
Do the Bitcoin maxis consider this term to be derogatory, or do other people consider it to be derogatory?
I've spoken to some maxis who are proud to wear the label, and wear it as a badge of honor. But I've also spoken to others who are like all in on Bitcoin, but they're like, don't call me that. So I think it depends a bit on personal preference.
Got it. Well, that was fun. So now let's go complicated.
Crypto bridge.
Yeah, so crypto bridges have been in the news as of late. We saw with the hack of the Ronin bridge, which is essential to the Axie Infinity NFT game. And crypto bridges basically connect different blockchains and allow people to transfer digital assets from one blockchain to another. And there are questions about them being vulnerable and whether they pose a security risk, because these are very complex tools within the crypto space.
Got it. So a way for somebody to think about that is like they act almost as, translators, just mechanisms for you to move something from A to B in one way or another. And people might think of bridges as like, well, here's a physical structure or here's a place. But like, how do bridges work exactly? Like, are these just software? Are they programs? Are they companies? Like, what are these things?
Yeah, they're software. I think it's a good visual seeing that bridge, but really at the end of the day, these are very complex pieces of software that could be open to security flaws and holes that hackers can exploit. So there is a question of how do we make these bridges safer?
Well, another thing that has certainly been super topical is this idea of
crypto winter.
A great chill has descended on the markets.
A chill has descended on the markets. What a great way to put it. But a crypto winter is just a prolonged stretch of time where crypto prices are in a decline. So they might be stagnant for a while, but overall, we're talking about a major downturn in the market. When you're thinking about the winter, you're thinking about freezes, stagnation, unpleasantness, really cold temperatures. And so that's exactly what crypto winter, the term, is supposed to emote. We had one back in 2018 when crypto prices were declining. And we also have some people calling what's happening with the market this year a crypto winter, just because we've had this huge downturn in prices.
One of the more, I suppose, topical parts of crypto, or the contrast between what's called DeFi and TradFi, or decentralized finance and traditional finance. Traditional finance is a concept that I think people pretty much understand, right? It's the idea of Wall Street, it's banks, it's brokers, it's insurance companies. What's
DeFi?
Exactly.
Yeah, so DeFi is short for decentralized finance. And basically, it envisions a world where financial transactions are conducted over blockchain and where middlemen like banks or brokers are cut out. It hinges on peer-to-peer transactions. So this is really what people see as the future of finance if they're, big DeFi supporters. And there's obviously, really exciting stuff going on there. There's concerns over regulation. And we've also seen, too, people migrate from working in TradFi to DeFi, which is something that I'm really interested in writing about.
Right. So they're going from like a Citadel to a pure play crypto company.
Exactly.
Now, on the idea of pure play crypto companies, there's also a concept of a
DEX.
Help me understand, or help our audiences understand, what a DEX is.
A DEX is just a decentralized exchange. So if you're thinking about traditional financial markets, you're thinking about the stock market, you might think of a stock exchange like the New York Stock Exchange, the NYSE. That has sort of like a power structure in place. And a decentralized exchange is something like a Uniswap. Maybe you've heard of Uniswap, or DYDX, where users can trade coins, they can trade crypto derivatives, but it's anonymously, and there are no intermediaries, there are no banks involved.
Earlier, Hannah, you mentioned Axie Infinity and an NFT game, which brings us to this concept of
GameFi,
which, as far as I'm concerned, is a slightly misleading thing, because I don't think that any of the crypto games I've played are actually fun, but I will leave that to you to say more on.
Yeah, GameFi is a really interesting area that I love reporting on. It's, a combination of the words game and finance. And basically, it's a way to describe NFT and crypto games that place a heavy emphasis on earning crypto tokens through the game. And it's also connected to the term play to earn, which would be something used to describe a game like Axie Infinity, where a lot of the main objective is focused on earning money. So a lot of people describe these sort of play to earn games as just sort of financial tools and investment platforms with debatably
crypto
good
skin
graphics.
on top. Right.
Yeah.
Debatably is a very charitable way of putting it.
Yes.
But these games do have people playing them, right? There's a fairly lively ecosystem in them.
Oh, yeah. They've actually become part of the gig economy in certain places. Like Axie Infinity is really popular in the Philippines. And we saw a lot of interest grow there during the pandemic when people were quarantined and at home and, just on their computers all day. So it's become a job for people and a way to earn a living income.
Got it. Thank you, Hannah and Vildana. We'll be right back with more terms from our Bloomberg Crypto Glossary. Well, we've said NFT a couple of times now, so now we get to explain it. So NFTs are non-fungible tokens. People, if they know what they are, they might think of them just as monkeys, but what else are they?
This has been a super hot topic the last couple of years, especially since the pandemic has broken out. So as you said, they're non-fungible tokens. They basically just allow holders of like an art piece or a collectible to track ownership of that art on the blockchain. So a meme can be an NFT, art can be an NFT, a clip of something that happened maybe in a sports game can also be an NFT. Like I said, they were super popular last year. The market's sort of come down a bit since then, but we did have notably Ukraine selling their own NFTs to fund their war efforts earlier this year.
So let's say I spent $500,000 on an NFT, which I'm not making up. People have done that. Where would I show it off?
A lot of people show it off on their Twitter profile pictures, basically. Or you might tell your friends about it, or you might hold it in your crypto wallet. But yeah, it's just code, basically, on the blockchain.
That seems less fun. This does seem fun, though. Talk to me about
shitcoins.
Yeah, is it okay for me to say shit?
Absolutely.
All right.
Only on this show.
Cool. So shitcoins, yeah, this is a derogatory term for cryptocurrencies that are perceived to have little or no value and no real discernible purpose. You know, we've seen it used to describe things like meme coins, like Dogecoin, where people are just like, this is dumb. To make matters even more complicated, there actually is a cryptocurrency called shitcoin.
Just for maximum fun.
Oh, yeah.
Do we know what that coin is trading at?
I just looked it up. The shitcoin cryptocurrency is trading at fractions of a cent.
Appropriately enough.
Makes sense.
Another concept that people say makes sense, but other folks have questions about, is the whole idea of
staking.
Who's going to talk to me about that?
So staking is when, if you're a crypto investor, for instance, you actually let your coin be used to help facilitate other transactions on the blockchain. So if you have some coins laying around, you might actually deposit them in a digital wallet, you lock it there, and then what you're hoping is just to get rewards in return or a yield.
So it's almost like crypto escrow. You agree to lock up your crypto for some amount of time, which allows other people to make transactions on those things, and in return, you get paid a yield of some kind.
That's right. Yeah, you're hoping to get these rewards. You're hoping to get something in return.
And one of the bigger areas of controversy as it relates to staking, which is a key element of DeFi, is the idea that the yields that you're getting are just massive, right? Like if you have your money in a bank and you have it there, and it means that the bank can lend your money to other people in the form of loans, you're getting, like sub-fractions of a percentage interest rates. There are folks in crypto that are offering, 1,000% APY or even more. Like, how is that possible?
It's only possible in DeFi, really, and this has been such a sort of like striking point of what's been happening in crypto markets over the last couple of years. So you had, during the pandemic, you had really rock bottom low interest rates. And so if you had cash sitting around in your bank account, you really weren't earning very much. And so what was happening in the DeFi space was attracting a lot of attention because some of these yields, as you say, were just astronomical. But really, it's a function, it's a characteristic of the DeFi space.
Another characteristic of the DeFi space, or something that describes a characteristic of the DeFi space, is TVL. What does that stand for and what does it mean?
Stands for
total value locked.
And this refers to how on DeFi platforms, people will deposit crypto in the hopes of earning interest and yield through processes like lending. And TVL just basically refers to the total value of those deposited assets on a DeFi protocol.
So it's almost like assets under management.
Exactly.
Another sort of big concept that gets thrown around a lot, especially by venture capitalists, is this whole idea of
Web3.
What I would love to hear from you is what Web3 is and what it isn't.
Web3 is just a brand new version of the World Wide Web, basically, but it's built on the blockchain. So if you think about the internet that we have currently, a lot of people might argue that we have a lot of tech companies that have just taken so much ownership there and they just control so much of the internet. Web3 sort of shifts the power back to the user, away from some of the tech companies that have sort of been sucking up all of our data and selling all of our data and information to advertisers. So gives the ownership back to the users.
Hannah, is that actually happening, or is that like the sales pitch?
It's very debatable. It's a super hot topic within, venture capital investing in crypto, especially, when investors are putting a lot of money in platforms in exchange for tokens that give them control over how the platform is managed. So they're getting these massive amounts of tokens that give them voting rights in terms of how, a protocol is moving forward, and they help shape how it exists. And they can also stand to benefit enormously if the protocol takes off. So yes, this is an area of debate whether or not Web3 is actually a decentralized space.
Because in an actually decentralized space, like we could all quit our jobs and sell art on the blockchain and monetize that art directly and, not need agents or brokers or anything like that. But that's not super happening at scale yet.
Not yet. I mean, we've seen attempts. We've seen, things pop up like decentralized social media networks and, really interesting applications. But Web3 is only 20% of the way there. And I've heard that from people who are really gung-ho about the space.
Okay. Well, a thing that's happening today is
yield farming.
I am not allowed to yield farm because I am a reporter reporting on finance, but some people are and they're making money. Tell us how this works.
Yeah, so yield farming, you make your crypto work for you. You want to earn interest through things like lending out your crypto. You might actually get a new coin in exchange for lending your own holdings. So this is like a pretty exciting area where people think that they can make a big buck on, lending out their crypto.
So one of the big, perhaps more fun parts of crypto is the idea that there's literally a meme for everything. And, there's also some acronyms that people throw around a lot. I will have friends say, okay, I keep seeing these people typing on Twitter GM or WAGMI, and I don't know what these things mean. Help me. So let's translate a couple of those too.
This is one of the more fun parts of the crypto space. So you have a lot of the crypto dialogue and discourse taking place on Twitter. So you might see people log on in the morning. They'll say GM, which means good morning. GN means good night. So you have a lot of people talking to each other through these memes or acronyms. So just to give you maybe a quick rundown of some of the more popular ones.
When Lambo
is just an aspirational meme that refers to Lamborghinis, where a couple years ago during a huge crypto boom in 2017, you had people buying really fancy sports cars and showing them off at different crypto conferences. And so you have people sort of saying, when Lambo, as in, when are we going to hit the riches?
LFG
is another abbreviation. It means let's blank
freaking go.
Yes. So it's a rallying cry for people in the crypto space. HFSP means
have fun staying poor.
That actually, it's a taunt. You'll see it on Twitter all the time. It's pretty derogatory. It's, when somebody is sort of calling out crypto for whatever bad influence it's having, or for lack of regulation, or for prices crashing, or for anything that's sort of been negative in the crypto space, crypto fans might reply with HFSP, have fun staying poor.
And I'm sure in the past couple of weeks, those crypto critics are now replying to crypto fans with HFSP.
They might be. There's a lot of interesting, fun, crazy stuff happening on Twitter in regards to
a lot of McDonald's applications being passed around to people.
Yep.
Oh, man. What else should our listeners know? How can they go bravely forth into the crypto wonderlands and know what people are talking about?
Yeah, no, I mean, there's so much information online for people to sift through that it can be hard to cut through the noise. But there are some really good educational resources out there where, you can learn about these terms and, kind of figure out your own way within the space. And basically, I also think the new rule is if it exists in crypto, there's a meme of it. So you have to have a sense of humor when looking at this space.
DYOR means do your
own research.
Exactly. That's a popular one.
And very linked to what Hannah was saying, right?
Exactly.
There's always a way to find something out. The problem is not everything that's out there is necessarily reliable. But hey, well, this is great. I'm going to just send this episode around anytime anybody in my family sends me a WhatsApp and they're like, what does this mean? I'm like, here you go. Here's Hannah and Vildana explaining this to you. So thank you so much, both of you, for joining us. It has been a real pleasure and look forward to having you back on again soon.
Thank you.
Thanks for having us.
You can find more of Vildana and Hannah's reporting on the Bloomberg terminal, on Bloomberg.com, and on Twitter. Hannah is HGMiller29, and Vildana is @VildanaHadrick. On the next episode of Bloomberg Crypto, Fidelity, one of the largest investment managers in the world, made headlines when it announced its intention to offer clients the ability to invest in crypto through their 401k retirement accounts. In such a volatile environment, is it a risky bet to add digital assets to your retirement plan? I'll talk to Bloomberg reporter Suzanne Woolley about the recent history of 401k investments in crypto and why the US Labor Department is less than enthusiastic about Fidelity's move. I'm Stacey Marie Ishmael, and this is Bloomberg Crypto, a daily podcast from Bloomberg and iHeartRadio. For more shows from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts. Email your comments, questions, or suggestions to crypto@bloomberg.net. Find us on Twitter @crypto. The producer and editor of this episode is Vicky Vergalina. Our engineer is Blake Maples. Original music by Leo Sidran. Bloomberg's head of podcasts is Francesca Levy.